landslide victories don't come along very often. So, number one, it should be protective for the stock market in New Zealand. So there's you've always got like a bit of a put in there. And the second thing is it should be good for the currencies, against certain other currencies, right? So which ones are we thinking? Well, the Aussie is the obvious one because it's the closest trading partner. Maybe look at the yen as well too. So Kiwi yen could be another interesting one that might be worth looking at. Still not one of my 4 charts, by the way. And but that's you need to think about some of these crosses. Now, the reason why I haven't mentioned the obvious one, which is dollar Kiwi, is because I don't feel the same way about the US dollar versus the Kiwi and that relationship. I have at the moment a fundamentally different view about this, and I need to comment a little bit on.
Mate, I just need to butt in for 1 second. I do apologise.
That's all right.
Look, I'd like to welcome everybody on YouTube and the Facebook live stream and apologise for the late start to the show. We've had some issue with the streaming software, and James has come in and fixed that up. So we now are live streaming to the social media. I do apologise for the delay. Largely, you've missed myself at the start, which means you've missed nothing important. You missed Alexis, which was quite important. I'll try and get a recording of that up tomorrow morning for you guys so you can catch it up if you've missed it. And now we're with Julian, and we're going to go into his 4 charts. So you're in at a good time. Back to you, buddy.
Thanks, mate. Yeah, so my theme for the next 2 to 3 weeks is that the US dollar is going to strengthen. I think you've got to be quite picky about where you demonstrate that. And it's also got to be on confirmation, right? This isn't just a willy-nilly, well, I'll just sell everything against, I'll buy the US dollar and sell every currency pair out there. Because obviously the US dollar is going to go up against everything. It might well do that, but I think we can do better than that. And so in my thinking that I have going on at the moment, I'm quite bearish against the euro. So euro dollar should probably head down, I think, again. I'm not quite sure about. I respect the attitude that it's sort of been going nowhere for some time. I think that's about to come to an end. To Paul's point, I think we're about to set off in a new direction. That may be up, but I don't think it will be. Like I said, I'd like to comment around the commitment of traders. There's a lot of talk around how the commitment of traders have significant commercial positions, which are short the euros along the US dollar, and the same way the dollar index has got quite a substantial long position as well too. Now, there's 2 aspects to this which I think need to be highlighted. Is that when the change in open interest correlates with those commitment of trader position reports, it produces incredibly powerful signals. When you have the open interest declining the way it is doing across a lot of these currencies, whilst showing a commercial position that's substantially dollar positive, US dollar positive, that probably is illustrating the fact that 2 things are going on. Number one is that activity is falling, sort of obvious because open interest is falling. But secondly, it may say that any reversal that does take place, so i.e. the US dollar does get bid up, euro goes down, dollar Swiss moves, dollar CAD goes up, you get the gist of this, right? Then those moves, those reaction moves might be muted simply because the amount of open interest out there is not sufficient to generate the what's the word I'm looking for? The wrongness of the positions, if you like, from the market to cause a substantial correction to take place. So whilst I'm dollar bullish, the question is I'm not, the point I'm trying to make is I'm not super dollar bullish. We're not going back to 100 on the euro. I don't think we are. That would be interesting and highly entertaining, but I don't think that's going to happen. I expect a correction to take place, but maybe not as substantial as I was sort of illustrating about 3 or 4 weeks ago when I began to talk about this. So that's just something to bear in mind. Now, that having been said, let's go choose our poison, right? And the Aussie's trading pretty crappy, as Geoff and Paul have both pointed out. That may be a useful target to have a go at. Again, the euro, we talked about that one as being interesting. I think the Aussie is probably the weakest of the bunch this week. And so I'd be looking at that for trade. And again, a lot of people trade that Aussie Kiwi cross. And if the Kiwi's holding up, and they're going to sell the Aussie and yada, yada. Again, you get the gist of this, right? And how do we put these positions on? Well, we're looking for breaks and new lows. And, if there's any sort of reaction on the hourly charts or something like that, then maybe that just presents you with an opportunity to get a position off, so things like that. So you guys know how to position it with your tools. It's really about identifying what I think are going to be the interests for this week. I'm also quite bullish on dollar CAD as well too, as another alternative to the Aussie, just to spread the regional love around to move into the Americas as well too. For those of you that have an interest and some of the things that are going on, and to I guess again to prove Alex's point, if you look at the fundamental news coming out of China has been incredibly bullish, and its currency moves have supported that. So that isn't a trade. Again, I'm recommending that you suddenly start selling the dollar renminbi. I don't think that's the right idea. Sorry, buying it. I mean, I don't think that's the right idea, because that currency pair has been strengthening clearly in China's favor for quite some time now, as a result of the fact that they're out of COVID, but their economic situation is improving rapidly. And again, just looking at, I know there's a lot of the world sadly is still in lockdown. When you look at what's going on in New Zealand, and I had a chat today again with some friends of mine, I'm still trying to find somebody, the people who are in hospitality and airlines, who isn't doing well at the moment. The economy seems to be rocking and rolling outside of the obvious sectors that are struggling. Even tourism seems to be doing a little bit better as well too. So, bear these things in mind, right? So when we scoot around stuff, and if I'm bullish on the dollar, then what does that mean for some of those other cross currency asset classes? Well, that probably means that I'm not that bullish on oil. This is a seasonally bearish time for oil. I know that nothing's happening, but the great thing about nothing happening is that it's gone back to the top of the trading range. Maybe you've got to watch this like a hawk. I think I'll be looking for some kind of price action movement to get confirmation, and I think the down move in oil might continue. I could be wrong on this one, and I think you've got to hold close, tight stops on it. But I'm getting a little negative on the oil market for the similar reasons that I'm bullish on the US dollar. And I also think that extends to the gold market as well too. I know that I've been waxing and waning about gold from weeks and weeks and weeks now. And I think some of this is my reticence to participate at the moment before the seasonal bullish time in Q1. And I've sort of been nervous about it. It's had its moments, and September's normally a little bit of a flip up time and a moment. But realistically, from sort of here on through to December is not the most bullish time for gold. It may change with the election. Again, who knows what's going to happen to stocks, and it might go up with stocks, or it might go down with stocks, depending on what the direction is. These days, it seems to be quite highly correlated with stocks. So stocks go up, it does okay. Stocks go down, it does a bit crap. So just bear that in mind. But I'm not that bullish on gold at the moment, and we could see a break lower, I think, over the course of the next few days. Not necessarily a prediction. I need it confirmed by price action, but that's what I'll be looking for. And so we've got a relatively, that's my overall theme. My overall theme is US dollar positive, and consequently, as some of the asset markets, the commodity asset markets, a little bit negative. That does not mean to say I'm negative on stocks. We're coming into what essentially is the biggest seasonal bullish signal of the year in the last week, October, first week in November. Doesn't matter how you trade it, how you see it. Around that time, it's bullish. Doesn't really matter where we come from. The track record is pretty clear about this, especially leading up to the presidential election as well too. There's normally quite a seasonal bullishness, and I'll be taking buy signals if they occur. So this is really down to whatever method you're using, directional wise. I'd be thinking about the US stocks, and I have to pinch myself as well some days and say, really, you're going to buy it here? But it doesn't seem to be trading that badly overall, quite honestly. And if we get that level of uncertainty in the US economy and the US election coming through, and it's not trading that badly, what will it do when you have a US president actually get elected, whoever that might be? And again, interpreting that is sort of matter of debate. But I suppose the best way to look at it is to say that Biden's probably good for overseas people that have exposure to the overseas markets, US companies that have exposure to the overseas markets, and Trump re-election will be good for those people who have a domestic exposure. So think Biden is China and US companies that have exposure in China, and Trump is US companies that have exposure in the US. I don't know, as a way to think about it. Paul, I think that's pretty much me. I've rabbited on for a little while. I hope people have got a fair sense of what I'm thinking at the moment. Especially around sterling and things like that. So again, I'm looking for medium-term opportunities there. Try and take trading signals where we get it for US sterling down. We're in the crux of the negotiations. Brexit negotiations should be coming to their conclusion, he says with an exclamation mark. It's only been 5 years. Sometime or other in the course of the next couple of weeks or so. Fingers crossed something turns out. But I think if something good does turn out of it, that trend will last for a number of days, if not weeks. That's it for me, Paul. Okay, so Paul seems to have taken a breather for a couple of seconds. Does
Sorry,
anybody
mate.
have any? That's all right. Does anybody have any questions they'd like to raise?
Look, if there are any questions, I've got nothing coming on YouTube. We're still having problems with the stream on Facebook. I've got nothing in YouTube as far as questions go. If there are any questions, we will ask you again. We'll give you a few seconds here to push them in. We are going to make a someone asking us for our take or your take on dollar yen, Julian.
Yeah, great question. Thank you very much for that. The support. Okay, I'll get to the support in gold in a minute. The dollar yen should go down, and I don't understand why it isn't. It's the exception to the rule on my US dollar strength argument. Is the short answer to that question. And I'm sort of a big. So the reason why I'm quite a big fan of the yen at the moment is because of the overseas purchases of JGBs that are going on. So the Europeans are selling them, and the Asians, especially the Chinese, are buying heap tons of JGBs. And I think that type of fundamental shift is really important from a market perspective. Just the volume of the flows into the yen is quite interesting. Now that may be because the Chinese are very worried about their own strengthening currency, and they're sort of like just gently trying to nudge it, which is a possibility. But I feel that whatever happens when things like that take place, the yen should probably benefit, and maybe that's going to continue to help strengthen it. My tolerance level is very low for this, above 106. I think it's a change of something or other, and I'm going to be out. So bear in mind that the way in which the dollar yen tends to trade is it will do nothing for a very long period of time and then go utterly, completely nuts. Hopefully it'll be down this time.
Sorry, Julian. JGB, Japanese government bonds.
I apologize, Paul. That's me talking trader speak again. Thank you very much for reminding me. Yes, that's the Japanese government bond is JGBs. So the Chinese government has been buying significant quantities of those. So if you look at the Chinese government's holdings of reserves, they fall into two extra categories of what they've been adding in the course of the last 18 months. So the add has been Japanese government bonds and gold. And what they've been selling is US bonds. Hold on a second. Let me look at gold and what we're thinking about with gold. If somebody could quickly flip a chart up, just a daily or even a weekly chart of gold, that would be awesome, guys.
Alexis, you okay to bring up a gold chart? And we've got a question from Dennis on the Euro GBP after this as well, if you've got time, Julian. I think the answer was a bit briefer. So
again, you can look at this gold chart. What's going on here is we had a triangle to end all triangles until it ended. But even then, all it did when it ended that triangle was to drift down to the major support level that was created by that triangle, that technical pattern. So what we've done now is we've gone back broadly to revisit the breakdown point. So this is pretty critical for me. So where I see a breakdown on the weekly chart of key support levels, so I think the last 2 or 3 weeks, where we start to see that, then I'm going to get concerned, right? And the gold should start to head lower. Now, where does it go down to? In my head, I'd love it to go down to the 1700 mark or the 1600 mark because I'd like to buy some more there. However, it's difficult to say, but actually those levels about 1700 isn't particularly stupid. That sounds utterly nuts if you think about it from where it is at the moment, but it's not nuts if you look at that technical pattern. Certainly 1800 would be a lock for me if it did begin to break down, and I'd like to see it a little bit lower into that congestion area around the 1700s. I hope that answers your question. But this is, gold is something you can look at weekly charts on and try and get a decent read of. Yep. And that actually measures sort of right from the move back up, the reaction move that we've just had now over the course of the last 10 weeks or so. So last 10 days or so, 20 days. Cool. Thank you for that. Brilliant. Thank you very much, Alexis, for doing the editing there. That's fantastic. Dennis, Euro GDP all over the place now. This will be like this until Brexit over. Okay, well, is it all over the place? Could you possibly put a euro sterling chart up for me on the dailies? Right. So so all over the place is a state of mind here, Dennis. So I don't consider that to be all over the place. Is that actually a daily chart or is that a period chart?
Daily chart.
Wow. Okay. Yeah. No, Dennis, that's going nowhere. So what's the actual range been? So we've had somewhere between 90 and 92 now for the past, I don't know, what, 4 or 5 weeks. So that's a 2 big figure range over 4 or 5 weeks. Pick at your argument there, Dennis, but actually I don't think that's all over the place. Yes, it may have looked intraday that there's been some volatility, but really when I'm looking for 15 big figures, then 1 or 2 big figures isn't really a big movement to me. So I actually think it's been quite quiet. That to me suggests that, so think about this a different way. What positions do people have on here, right? When you look at that chart in the world of going up, going down, what's going on, right? Is it likely more to go up or more to go down? Well, I think you can argue that for the last 2 weeks, it's been a little confused about what it's trying to do. That I will grant you, Dennis. And it has lots of tails all over the place and clearly lots of noise coming out of politicians, which is the market's been knee-jerking to. But I don't see right now that there's tremendous positioning. If anything, I say people are probably slightly long, slightly biased towards the euro. But that we've spent way too long consolidating, and that breakup we had about a month ago in early September has just not followed through, right? So it went up and then it stopped stone dead. And more importantly, not only to stop stone dead, it's now retraced about 2/3 of that. That's not necessarily a bullish thing. It may well go up from here. Anything can happen, but it doesn't trade. It trades heavy, right? My interpretation of the chart as I see it right now. And I also think people are in different positioning wise. Now, what does that mean? That means that if it does start to go down, nobody will have the position on, which means it'll probably go quite quickly. So just bear in mind. So work out if it's going to go down, where's it going to go down from, to give you a sense of, I need a bit of certainty here. We'd all love for it to go up, make a new high, and then completely reverse and go straight down. That would be fantastic. Life doesn't often work that way. So maybe we have to trade it as though if it keeps continuing to go down, because why is this correction that's been going on for the last 3 weeks been going on for the last 3 weeks, right? That just says to me that there's just nothing, in terms of positioning, people are just scared. And that means that also they don't have anything on. And so when this market does move, it may be quite explosive, especially if it went in the other direction. I think that would be the surprise trade at the moment. So down would be surprise, up would probably be what people are probably thinking about. So if they're going to be surprised and it goes in line with what my thinking is, then I suspect it'll move quite quickly. But it'll be a tough one for you to sell, right? So if you said to me, okay, hell, I've got to sell 90.00 because I think it's going to go down to 78, then that's a tough trade as things stand today, because you'd end up, you're worrying about selling the low, and it really is only a trading range. I get. So in that case, then wait till we get an edge. What's our edge? Our edge is if the market starts to move, then we can jump all over it, right? So do it that way. But there doesn't appear to be a lot of pre-positioning right now. Hope that helps. Yeah, I do get your point. Just remember, Dennis, that it does change a lot, and there is a lot of Brexit news out. And I was with the euro sterling trade. It sort of happens. It's a bit of life, really. And these things are going to happen. Where you and I, neither of us, Dennis, probably have much of an edge on what's going on with the Brexit news right now. Neither of us are working in the UK government or the European negotiating team. So in that case, maybe it's just better, given the way the markets are positioned right now, to think about jumping on board once we see something start to break out, because it will go quick. And I think we need to be part of that journey when it does. I hope that helps, Dennis. Any other questions from anybody?
Right, if we've got no more questions, we will start and move along. Thank you very much, Julian. My camera's disabled, guys. If you could fix that for me, that would be great. Julian,
Alexis, thank you very much as well, too, by the way. That was awesome.
Yeah. Cheers, Lexi. Thanks, team. It's a good show so far. It'd be nice if we can get it to stream more smoothly. Thank you very much for coming in, Julian. Always appreciated. Shukri will join us later if he can. He's currently running a crypto course for those that joined his advanced program. It's still going at this stage. He'll try and join us afterwards. We may get him in, we may not. But next we'll go to Ainslie and talk gold and oil. We've still got Lloyd to do on aspect of currency strength. We've still got Geoff to do some technical analysis for us. So plenty coming up in the show. We've got to finish top of the hour today because I am talking to the mentorship students about COD and seasonals. We finally have our own COD and seasonal data. We'll be releasing that to the mentorship students in the session at 6 o'clock. So if you are a mentorship student, do make sure you join that session at 6 o'clock as well. Okay, Ainslie, over to you.
Hi, how are you all? I hope you're well. It's Sunday again. How did it get there? Thanks, Lexi. Really appreciate that. I really don't have a lot to add on to Julian's comments on gold. It's been, for me, it's just been a bit of a nightmare, to be quite honest. I did try and jump in on a few trades, and unfortunately I got chopped around, and that just came from not looking at my charts properly. For me, I need to have moving averages. I'm a trend trader, so I need to have moving averages going in the right direction, and I just didn't get there. I now look at my daily chart when I was doing my review on Saturday, and my moving averages are not only all flat as a pancake, they are hugging the monthly pivot. So there is no way. Oh, and ADX that I also look for correlation is also well below 25. It's actually down around 14. So for me, taking any trades in this market, that, as you can see, we had the triangle, all triangles there, as Julian said. I know how much he loves triangles. And then we went down, we tested that low, and then we back up again, and then we've just gone flat, just flat. The only excitement was on Tuesday when Mnuchin said that he doesn't think we'll get an agreement on further stimulus package for with Nancy Pelosi, and that was about the only excitement for the week. The rest of the time is just drifted around. What's going to happen in the weeks coming up? I'm scared. To be quite honest, I'm a bit, I don't know. We've got a lot of consolidation, and I've got to say, which direction it's going to go in, can't tell you. There's, I was doing some analysis work this afternoon, and the RSI is saying it's got a bit of bullish strength, and there seems to be a bit of sentiment to follow stocks at the moment, as Julian pointed out, a bit of correlation, and we might be looking for an upside to the 1940 range. However, if it breaks the simple moving average on the low side, we'll be looking for something to the south of the, yeah, look at that, 50 and the 20, flat as. Sorry, thank you, Lexi. Just, yep, make it a little bit bigger so I can see it a little bit clearer, because I just ignored it completely. Thank you, that's enough, that's enough. I get the picture, I shouldn't have been trading it, and I did, and look at that. Don't trade when you're 20 and you're 50, a flat as. It's called consolidation. You're not going to get a clear run on that. If you want to throw the pivot in just to insult me completely, go right ahead, because the pivot is hugging the 20 and the 50. In case anybody wants to have a look at that closely on the chart, and then you'll wonder why I was just like, I was nuts this week. Anyway, to the upside, 1940 up to 1960. If we get some strong correlation on stocks and there's an improvement and there's a run up. To the downside, oh, look, I'm not sure about 1700. I'd love it to go back to 1700, but I don't think the strongest sentiment is going to get there. I think we'll 1800, maybe 1880, 1860. Then have a look around that 1800. If it does break through all that, then you end up with a free fall. But as Julian put it, 1800 is sort of like if you have a break. But on a chart that is just going neatly to the right. Thanks, Lex. Yeah, in there somewhere. That kind of support level, and keep an eye on it and see how we go from there. As for oil has also been nothing more than trying to work out what a picket fence looks like, US oil. We had a close, and again, look at that chart. Flat as. Let's just bounce around and just not do anything and go anywhere. Fundamentally, OPEC have said that OPEC Plus and OPEC countries are 100% compliant with the rate reductions at the moment, the cuts. However, there's the scuttlebutt is that there is growing tension. Now, whether somebody starts to throw a spanner in the works and increases their supply, which will hit the demand, which is also dying off as we're looking at third waves on quite a few of the countries now. Demand pulling back, supply increasing. You'd hope they'd learnt their lesson from April, won't we? We hope. I think they've got a slightly better handle on what happens when they don't actually have a handle, or when they don't comply with their cuts. They really lose it all. But as you can see, there's nothing exciting happening in the oil market just at the moment either. The good thing is, and I say on both the gold chart and the oil chart, as we've gone through a really long period of consolidation now, is something will happen soon. Whether that's just after the 3rd of November and everything is considered one way or the other. Yeah, I'm, we all know that period of movement will always it'll come after consolidation, and we're going through the consolidation. We've had some really interesting time during the year. We're just going to have to wear this for the time being. So unfortunately, I've got nothing really exciting to say just at the moment on oil or gold, except for watch and wait until you get not a false breakout, but some really good, clear direction. And moving averages that actually move don't actually have gone to sleep, don't have a pulse, flat as pancakes. Don't trade those. Not recommended. So short and sweet on that. So sorry, I haven't got anything really exciting to tell you.
Cheers, Ainslie. Thanks for that. Always interesting to hear what you have got to say. And look, we've always got the danger that Marcus is going to do a little bit of this as we go along. We're going to go to Lloyd in a minute and talk about currency strengths and relative strength of currencies at the moment. Lloyd, how are you doing?
Hi, Paul.
How are you?
Was a pretty rough week for me. Yeah, so I shall not say the reason why, I guess. But yeah, I mean, I think all things are finally turning out to be okay for me. Yeah, I mean, that's on a personal level. Yeah.
Good news, mate. And what do you got as far as currency strength goes?
Yeah, in terms of currency strength, actually, when I look at my charts, there wasn't much changes. Yeah. My charts are still pretty similar compared to last week. Whatever I'm bullish is still, and whatever that I'm bullish from last week is still the same. Yeah, generally speaking, yeah. So probably the biggest changes will actually be DXY dollar. Yeah, I'll go through that as well. And more of it is due to, I don't think DXY is currently on a bullish or bearish sentiments anymore. It's more of a neutral sentiment. Yeah, so that means it's great for, to me, that means it's great for range trading. Yeah, for trend, I think we've got to take a back sit. Yeah, so for the British pound, price is pretty much still respecting the horizontal level. It's still going up. I don't see any sort of divergence or any sort of thing. So I'm still going to be pretty bullish about the pound currency. Canadian currency against, I think this is Thursday bar. So we can see a very nice bar on Thursday that gives us a low test bar. So I'm still pretty bullish about CAD overall. Yeah. Euro. Now Euro, as of last week, I think I put it onto a neutral territory. But looking now, that Monday would be I would say a defining moment for me this coming Monday, because if price really respect this horizontal level, then I will actually further demote it to being a bearish sentiment. Yeah, so Monday bar is going to be very important to me. So what I have over here is that in fact on my chart, this really is not that significant to me. By the way, this is not divergence. It's just that I really like it when price actually, the indicators does match up together. So you can see that it's bullish and then followed by the bearish sentiment. So we're seeing that, and we can see that price, in fact, on last Friday, it actually did hit the horizontal level. So if Monday bar proved to be bearish, then to me, at least, Euro, I'll be looking to short. Yeah, I'm not looking to actually range trade it anymore. Yen, again, you can see that price really respect very beautifully at 95 level. So same for 1 month back, I'm still going to range trade this pair. Yeah, we can see that, in fact, price actually rejected 95, 2 bearish bar occurred, and then on the MACD, we can see that price is, the sentiments does occur, concur with it. Yeah. So although on the bigger picture, yen is ranging, I'm going to short it for this upcoming week simply because it's at a resistance level. Swiss is really in the middle of nowhere. Currently, I'm not really that interested in trading Swiss pair. Just that on the big picture, Swiss is very similar to yen. Yeah, it's just not going in a very directional manner. Yeah. So even if I were to trade Swiss, I'll want to wait for price to come to either a support or resistance level before I go about doing my business. So yeah, dollar is the one that's a bit confusing to me. So anything that's confusing to me, I really prefer not to touch it. I think Julian just now did mention that he's a bit bullish about it, if I didn't hear it wrongly. But to me, overall, in the big picture, DXY has not been going in anywhere since August. Yeah. So previously, I was actually bearish about it, but nowadays, I think I'll just leave dollar alone until probably the American election is over, and then there's some clarity to where dollar might be going. Kiwi is on a huge range, very nice. So you can see that price is very near the support region. If it comes down further, then I'll begin to put more long emphasis on Kiwi, simply because it's just in a range. So in this coming week, we can look for long opportunities because its price is really near the support level. And same as last week, I'm still very bearish about Aussie. On saying that, Aussie might have some retracement coming up for the first early part of the week before the bearish, it will show you bearish strength. So that's about it. So overall, I'm looking at pound and cat strength, Kiwi and Aussie weakness. Yeah, that's my outlook.
Sorry, Lloyd. Your charts have got lots of gaps in them. Why have your charts got lots of gaps in them? What are they? This doesn't look like an Aussie dollar daily chart to me.
Oh, for currency indices, it's common to have gaps. Yeah, unlike the normal forex pair, there won't be so much gap. But for the currency indices, it's common to have gaps. It's pretty much like stocks.
Okay. Okay, cheers, Lloyd. Thank you very much for that. So the dollar is the one we're not quite clear on at this stage?
Yep, not very clear on dollar. So yeah, I'll just be concentrating on pound, cat strength, Kiwi and Aussie weakness. Yeah, that's about my direction.
You could be in a pretty good place doing that this week, and I think we might have the dollar in the too hard bin for a few weeks from here. Dennis, just on your other question, look, to be clear, I've got about a 50-year back test on the S&P strategy, which is pretty profitable, and I've got an absolutely 0-day back test of me using discretion on it. So tomorrow morning I'll just buy it, and maybe it'll win, maybe it'll lose. But if I buy it every month and it's long-term profitable, it'll work out just fine. And there's no question tomorrow at some stage, well, in the morning, to be honest, at some stage tomorrow, we're in the middle of, we're in the chicken coop. When we've got that done, I will buy the S&P tomorrow, and I will do that absolutely regardless of what the price looks like, what I think it's going to do, whether I have a theory, someone else has a theory, the world's ending. Make no difference to me. I'll be buying the S&P tomorrow. And look, I do it with I take 2 entries. One's the classic entry that you guys take on your ATW accounts, and one's a slightly more aggressive entry that I take on my own rules, which can't be traded on the ATW accounts because it is a bit more aggressive. But I've got no problem buying the S&P regardless of what it looks like on a chart. No bearing to me at all. When I take that trade. Rightio, Geoff. Let's look at some charts, eh?
Okay, why don't we do that? I've got 4.
What about that rugby? Wasn't it good, eh?
Mate, I enjoyed the game. I did up until the first minute of the second half, I think, or the third or fifth minute of the second half, whatever it was, where they.
Cool, mate. I reckon you
lot
guys will
of-
take some beating at home. We've
Yeah,
got to
a lot of errors.
get that trophy back. I'm not sure it's going to be all that easy.
They're making a lot of mistakes, which is a good sign in longer term, because if they can cut those errors down, they will be very competitive. I agree with that.
You know, when you say that, Geoff, one thing they are, I don't know if it's a rugby show, but one of the things they are doing is they're playing rugby and they're having a crack at us.
Yep.
And the way to beat us is to have a crack at us. And if you do that, you are going to make some mistakes. We make plenty of mistakes, but we win because we keep playing. And I think they're playing a New Zealand style of football where they're prepared. If there's an opportunity, they're prepared to have a crack from anywhere on the field. If they think they've got a chance, they're prepared to have a crack. Boy, they're hitting the line hard. You know, there's lots to like about their rugby compared to rugby a year ago. I do think if we can get 1-1 in Australia and get that trophy back, we'll have done bloody well. I have a feeling we're going to find it pretty tough. I think that's nice because how old's your son, Geoff?
35.
So he's never seen Australia win in Eden Park.
No, he hasn't. That's true. That is
okay,
true.
mate. It's,
and I don't think I can remember it either, to be fair.
I can still remember. I can still remember it.
I'll bet you can.
Dark old day that was.
Still got a hangover.
Let's get into some charts, mate. What are you looking at today?
Mate, I thought I'd have a decent look at the Euro, but I won't start with that. I'll start with something that I've been stalking for quite some time and haven't really managed to get into it. I think Paul Hutton and myself have been all over this one for ages, but as you can see from this, I don't know.
I thought I heard him earlier on, but he's not in the room, so I must have hered someone else. It was a bit confusing.
I think it was Julian that you heard.
Ah, here we go. That would make sense. I mean, they sound nothing like each other at all, but
no, I think it was. He was putting on his best Australian imitation.
Oh, that's just concerning, if you ask me. Anyway, we'll move on. We'll move on from that. Over back to you, buddy.
All right. So this one for me is quite a clear chart pattern, and I can't find my pen. I'll point it out with my cursor. This little tweezer bottom, well, it's not a little tweezer bottom. This is a weekly chart that we're looking at, and it's a substantial tweezer bottom. But it's really easy to get carried away with chart patterns. They've actually got to be in the right place. And I think this one is in the right place because it has ducked below the lowest of the lows, and we've had this tweezer bottom. We've had a rally. We've come back and tested this area and failed again at this area. And I think that is why, and that's a higher low and that's a higher high, obviously. The trick here is getting your timing right. And it's been very, very difficult over the past few weeks because it's gone nowhere. But that's quite a trend at the moment, if that's such a thing. Is there a trend of going nowhere? Maybe there is. Well, certainly this has been in a range. There's no question about that. And it has been very, very difficult to find an entry. On the daily charts this week, we find that we've broken this longer term trend line that goes back to February. So pretty much all of the year thus far has been an attempt to get above that, if you like. And we've finally snuck above it, and we've now retested it. The interesting part here is how do we get clear of there, and how do we find an entry? That's the key to me. And the only way I can do that from my trading style point of view is to wait for that support level to be broken and come back as a false break. So that's what I want to see, really. It may not be a quick thing. It may be not even next week, but I've got to keep following that. At the moment, I don't see any way in on the smaller time frames either. But I do like the break and retest of this trend line that's, as I say, been in vogue since February, or that's where it began anyway. If you're a position trader and you like trading levels, then maybe the level above there makes sense, above that level there, or maybe even the breakout. You might want to trade that as well. And there are worse things to do, of course, than find a smaller time frame entry around this area if it does pull back a little bit. Of course, the pivots will change. Well, the weekly pivot will change tomorrow. I didn't really forecast that. It probably won't move too far, but maybe a little bit of an intraday test, break and retest of that area might be interesting. I'll be looking for that most definitely. Bigger picture, it doesn't like going below this level, but it's been stuck there for the longest time right now. That's a monthly chart. So we've been there pretty much the whole of this year, and we've been unable to get above it. Now that we have on a smaller scale, on a smaller time frame, I think that's the time that you want to start thinking maybe this has got a little bit left in it, or maybe this has got a bit in it rather. And that tweezer bottom, as I said, is the very first signal for me. So if I go back to there and end where I began, tweezer bottom, higher low. This is the trick. We haven't had a higher high. And that's what makes it a little bit tricky, and that's why we've been unable to find a good entry. I'll find one if it's going to happen. I'll find one, I hope, and that may well be this week. It may not. It may be next week, but I'm certainly focused on it. The rest is all about the euro, really, and the euro, to my mind, is in a very interesting place. If I talk about Euro Aussie, I'm going to have to talk about the Aussie and go back to that statement by Philip Lowe, which I believe has been, I won't say misinterpreted, but I will say overreacted. I think the market has overreacted to it. And I think the Aussie is going to be a buy, not against every currency, that's true. I don't think it's the strongest currency on the board by any stretch. In fact, it's the weakest currency on the board pretty much at the moment. But that gives us the opportunity, I believe, to find a good price on the Aussie. But you've got to pick your poison. If you've got a weaker or a hint that a currency is going to be weak, then I think the Aussie may well be a very, very good option to trade against. Now, Euro Aussie is in a very, very interesting position. I'm a bear the euro, which makes me pretty much keen to trade this short. But I also note with this range that we've been in since June, so the last 4 months, we've got lots of periods where we haven't been to the extremes. So we've spent a long time in here. We spent a long time in here. We spent a long time in here. And now we've spent, I guess, a long-ish time in here above the monthly pivot, pretty much all month and 1/3 of last month. The interesting part now is what happens next. Do we break and go out, or do we just bounce off the top here? Do we break and come back inside? Either way, I'll be prepared to trade that, to be honest. And I don't care which way, but my bias is definitely to the downside. So I'd like to see this pop out of here, then come back inside, present us with a lower high, and then we can go short. I think that's probably the best way for me to describe what I'm going to look for this week on Euro Aussie. Now, it may well be that the market considers that Aussie news or that statement by Philip Lowe is absolutely bang on they're going to cut interest rates. If that's the case, then this will probably break out. And if that's the case, I'll definitely look for a signal to trade that. So I'm not committed to the short. My preference and bias is to the short side, but I'm not committed to it. We're at a great spot. That's what I'm trying to point out here. This level is quite key for me. 165.50-ish I'm talking about. And if you have a look at the bigger picture on this, you can see through here, it has been strong resistance for a long, long time. Yes, the breakout with COVID, and that's no fluke. That's what that was all about. But, you know, throw COVID out the window, and I'm sure we'd all would like to do that. We've been in this range for just the longest time. So why would I think now's the time for this to break out? And I don't, frankly. So I'll be trying to trade this off the top down to the bottom side, back to the trade line or trend line rather, certainly. But then back to this 160, or let's call that 1.61, because I think that's the bottom of the range. So that's Euro Aussie for the week, setting up, I think, nicely for a short. But again, I'm not committed to it. If it breaks to the high side, I think there's a possibility there as well. Euro Kiwi. Now, my first question was going to be, what do we think is going to happen with the Kiwi tomorrow, with the election now done and dusted, and a pretty significant result. Well, certainly a certain result, as you were alluding to. Well, you weren't alluding to it, you're actually saying it, Paul. Yeah. What I see here, again, with my euro bias, if that is the case and the market's thinking Kiwi rally, then I'm thinking euro Kiwi short. Evidence to suggest that could happen is that we've now come back below. Again, this is the COVID outbreak, if you like, and there's no pun intended there, but that's exactly what that is. And we've come back below that level now and refuse to go above it. And I think with the potential euro weakness coming up, and if the Kiwi is to strengthen on the back of the election, then I can totally see why this would fall underneath that level. And there may well be a fair way to go on that, you know, even down to this area here, which is what, 140, let's call it 147. So there's potentially, you know, 300 pips there for not much risk, in my opinion. So I'll be looking for that. Maybe even tradable on the weekly chart with that bar there from not last week, but the week before. That's something I do like to see. It's a significant lower high. And I think you can probably even get profit before you hit a substantial support level as well, which would probably be in, I'm thinking, that vicinity. So you might like to take, if you want to trade that is, you might like to think about taking profit there and then letting the rest rip and see if you can get a good chunk of that if it is to go that way. But the chart's telling me that that this is a sell. And if you didn't want to trade the weekly chart, then there may well be an opportunity as I'm not sure we can rally from here, and that's going to be the issue if you're not in already on the weekly chart, or maybe on a break and retest of the support level. That may be your next option. I don't think we're going to, if this is to short, if this is to fall, I don't think we're going to go to resistance. I think we're going to go straight down, and maybe a retest is what you'd be looking for. I don't know if that happens tomorrow or Monday, Tuesday, Wednesday, who knows. But I think the break of this support level and a retest may be very, very interesting. Of course, that's the daily chart, and there is a hint at the moment. I wish I had a trend line that went up through there. That would be pretty cool. There's one that goes through here, which is kind of hinting at break retest, not only of the trend line, but also of the weekly pivot of last week. Interesting. I might try and find a way in here, but certainly on the smaller time frames tomorrow, I think that's what I'm going to be hunting come UK Open time. We will see. The last one is still euro, and it's euro dollar, and we've kind of been saying this for a while, but this is probably my favorite. And the reason it's my favorite is because the chart pattern is very, very clear to me. I really wish I could find my pen. That would be awesome. Aha, there it is. So this is a pattern I like to see. And what it is, or what it represents to me, is false break, higher false break, higher false break. 3 in a row. I call that my 3 little Indians. I mean, it may not be a classic 3 little Indians pattern, and I can't even remember what 3 little Indians looks like, to be fair, but it's what I call the 3 little Indians. But also clearly here to me is a left shoulder, a head, and a right shoulder, which means no matter whether there's 3 little Indians there or 3 little snakes, I don't care. There's also a head and shoulders there. And if that's a head and shoulders, then the neckline for that goes through here. And we've had a break of the neckline. Took the longest time to get there, but we had a retest and a very strong bar that got rejected. I think, Paul, you actually spoke about this bar earlier. And then the, two inside day bars before it actually broke. I think that's significant, frankly. And I'm not sure how to get in here right now, unless you want to trade, maybe a break of that neckline again, but it has rebroken. And even if you could draw that horizontal line where price is right now, if you draw that across this level, then you can see that it's also been rebroken, and a little bit of a doji type candle there on Friday. And I think we saw a few of those. I don't think there was too much happen on Friday, but that's interesting. The breakdown of that level again, and the retest of that level again, and the rejection of that level again. I'll be looking at that very, very closely tomorrow, and maybe on a 4-hour chart early in the day. Monday morning is not a good time for me to trade, I've got to say, but I think it's worth a look, because I think euro dollar, and I'm not a fan of the dollar. I heard what Julian was saying about it. Sorry?
When did that change?
Of the US dollar?
You've been a fan of the US dollar as long as I've known you, Geoff. You always loved that.
Yeah, like heck. I think it's trash. But anyway, we won't go there.
Mate, when you're ready, can I read you the parts out of Governor Lowe's speech of the reason for the move?
Yes, you can.
Can we do it now?
And I'm just about ready. Hang on 2 seconds.
Okay,
I'll just complete that. And yeah, I want to have a look at the 4-hour chart before I move from there. That's all.
Cool, mate. No worries.
And then I'm done. The 4-hour charts, because that's where we're going to start today, tomorrow. And as I said, I'm not a massive fan of Monday morning, that's for sure. But that's telling me that there's a very clear false break of the support trend line. So I would love to see this play out and go back up to here, to the pivot, the monthly pivot. The weekly pivot won't be there. It'll be down here somewhere. But I would love to see this play out where we get back to that monthly pivot. And that's where I'll be looking to trade this short from. Euro, US dollar tomorrow. If we get up there, then hopefully by UK session time, we're looking at a bounce off the monthly pivot. We shall see. That's me done, Nick. Tell me about Philip Lowe that I haven't read.
I'm going to read you three paragraphs and tell you what they mean in my view. Okay.
Yep. The 3 bottom ones. Yep.
Pretty close, not quite. The board will not be increasing the cash rate until actual inflation is sustainable within the target range. It is not enough for inflation to be forecast to be in the target range. While inflation can move up and down for a range of temporary reasons, achieving inflation consistent with the target is likely to require a return to a tight labour market. On our current outlook for the economy, which we'll update in early November, this is still some years away, so we do not expect an increase in the cash rate for at least 3 years. So extending out the lower cash rate for 3 years is reasonably bearish for the currency.
But everyone's saying that.
But
it's not just Philip Lowe saying that.
Different, Geoff.
Why?
Because he makes the decision. Everyone else is talking. He makes the decision.
No, you mean no central bankers are making the decision?
Well, no,
I'm talking about the central bankers, not his board members.
Cool. Look,
or
let me go further for this for you, okay? He's talking. There's another paragraph. Then he goes. The first is how much traction any further monetary easing might get in terms of better economic outcomes. When the pandemic was at its worst, there were severe restrictions on activity. We judged there was little to be gained from further monetary easing. The solutions to the problems the country faced lay elsewhere. As the economy opens up, though, it is reasonable to expect that further monetary easing would get more traction than the case earlier. So he is definitely suggesting that further monetary easing is likely.
But you can't stop there. He goes on to say more. That's out of context. If you stop there, that's journalism.
Buddy, that's a paragraph from a speech.
Yes, but he says more.
Yeah, look,
that's cut and paste. That one. That's like a soundbite that we get every day on the news, which is all humdrum.
But I'll tell you what,
I know he said it. I'm not denying he said it, but he goes on to say that there's more to the story.
Yep, I'm sure there is.
One for the Aussies.
He also talks about the balance sheet, and when they talk about the balance sheet by the Reserve Bank, they just mean how much money they've printed and how much they've bought with that money they've printed. From my view, there's certainly enough there to suggest there's monetary easing coming in Australia. And
well, clearly I read it differently to the whole market. And that's good. I do every day. You know, it's not unusual. But that's not my game anyway. This chart thing, that's my game.
Yeah, I get it. It's interesting though because you always have a good point when you bring this stuff up. Without reading the whole thing, Geoff, there's enough in there for me to think that the Aussie would weaken on that.
On that
there's a
part
lot
of it, I agree. But there's more to it. There really is more to it. Those three paragraphs at the end were very much a conflict that the board is going through, where on the one hand, exactly what you said, or where you stopped intimates, or even more than that, it states that monetary easing would help. But on the next paragraph, you'll say, well, monetary easing doesn't help this situation. And that's the dilemma that the board is in. And that's why I think there's no real, there may be an intonation, but there's no real statement from him. And I even read in one of the headlines that the Reserve Bank of Australia were dropping interest rates to 0.1%. Where does he say that?
But he certainly doesn't say that. I thought the next paragraph is pretty complicated economic stuff. It's clear enough to me, but I would imagine reading that you'd want to have a bit of an understanding of macroeconomics to get a bit of a view on that.
Well, that's where I went wrong then, because I've got none.
We will leave that for now. We will leave that for now. I think there is enough in there for me to read that and think there's going to be some selling of the Aussie dollar based on that. And again, we'll watch in the next look.
Well, that's right. Next Sunday we'll have.
Justin's been long Aussie New Zealand for the last 2 or 3 weeks, and very clearly he thinks Aussie's on the way up. So it's very easy for fundamentalists to have different views when they read this stuff, depending on what you read and what you take seriously. We will spend another week and have another chat next Sunday and see where it's gone, mate.
Absolutely, and I think that'll be interesting. And I'll bring a piece of humble pie along with me.
The Humble Pie Cafe. I went there on Friday, mate. Stopped in and had a keto steak and cheese pie.
Nice. Sounds good.
Wasn't the worst thing in the world.
Wasn't
Right, mate. More from you?
No, mate. No, I'm done. I'm short the euro. I've got a question mark on Euro Aussie, not surprisingly, and I'm long count CAD Swiss.
Mate, I like the euro short. I just feel if euro can just get through the level it's at right now, at the bottom of that sort of range, that there's some space down there. I like the euro short.
Big
personally.
space, yep.
Yeah, I do like that. I didn't get a chance to have a look at the CAD Swiss stuff you're talking about. We see that you and Paul Hutton have both been chasing it for a little while. Mate, what was the chart you saw that had just been going sideways forever?
That would be Euro Aussie.
Oh, really? Boy, that looked like no fun at all to trade. Well, yeah, maybe
I disagree.
4 hours or something. I'm looking at that going, my gosh, that's boy, you wouldn't want to try trend trading that for a little while.
No, you would not. But it's even more dramatic if you play it out to a monthly chart. Well, sorry, not a monthly chart, a weekly chart, because that range has been there forever. It's been trading in there for a long, long time. It was only COVID that broke it out of there, and it came straight back into it. So it loves it in there, doesn't it?
Yeah, really. Well, another way of looking at it is just to suggest that, the market just feels that's fair value. And sometimes we forget as Forex traders, look at charts and we go, we do this and we do that. But there's a few people out there, buying and selling these currencies for the exchange of goods. They also create a little bit of supply and demand. And, maybe it just appears the market feels this is around fair value for Euro Oz, Certainly,
I think that's good fun for range traders.
Boy. Actually, to be honest, Geoff, I just feel at the moment as if you're a range trader, life should be pretty good. I think between now and the US election, maybe about a week out from the US election, maybe the next couple of weeks, we've got 2 weeks, 2.5 weeks to NFP, haven't we? I would just think that we're probably looking for a pretty quiet time going through there, to be honest.
Yeah, look, there's a fair bit of volatility about last week in particular, which can chop you up if your stops aren't wide enough and you're on smaller time frames. So it's not as easy as you might think, but I think the bigger time frames are pretty reasonable. Yeah.
Yeah, it'd be interesting, Geoff. I don't know why I'm expecting a move in gold this week, and I've watched gold take on the top and bottom of its area recently, And boy, it struggles at both. It just goes up and it hits a wall and comes down and hits a wall. There's definitely buyers and sellers at different levels at the moment. And, I expect those to run out at some point and for us to see a move on gold. And I'll be pretty interested to see where that goes. Other than that, I've got to say, it looks to me like there's a fair bit of stuff, a little bit of ranging going on as we wait for some clarity in the US. And, I think, I don't know how to say this, but I think to some degree with the US, there's an expression, you can't make this stuff up. And I think traders are at a point with the US now where they're just like, oh, you got to be kidding. What next? And I think they're a bit over it. And I think we just need to get to a conclusion and see where it's going to go,
Yeah, look, I wouldn't like to be there. I've got to say, I'm pretty happy I'm living where I'm living rather than being amongst all of that stuff. And I think it's high time we had end of Brexit, end of Trump.
Yeah, mate, I'll tell you what, we're interested to see what the markets do at that point. Mate, is that why you moved to Tasmania? Because it's easier to do bamboo farming with 3 arms.
It helps. It absolutely helps. There's no question. But it also... It was either New Zealand or Tasmania. Right?
Well, mate, I'm going to leave my Australian sheep joke out because it's just not suitable for.
Good plan.
Don't go there. Do not go there.
Not going to do it. Not going to do it. But you guys enjoy eating it. Guys, we're going to wind her up. I think we are done, aren't we? I didn't see Shukri in. I don't think he's here. Been another interesting show, guys. And look, tomorrow morning I will buy the S&P. It's what I do on this date, and see how that plays out. We won't talk in detail about that because we are streaming to YouTube, if not to Facebook. We will get the Facebook thing sorted out in the next couple of days. That could be part of a new compliance thing with Facebook by the sound of it, but we will work through that. Guys, I'm going to wind this up in the way that I wind most of my shows up, and I'm just going to remind you guys to stay calm and make good decisions. That's what trading's all about, Don't rush into stuff. Don't stay out of good stuff. Just stay calm and make good decisions. If you do that, it could work out. If you're on the mentorship program, or if you have an invitation, raise it in 10 minutes. We're talking COT, and he's going to explain to you how to use the COT data that we have to make money. He's going to show you how to use the seasonal data that we have to make money. I'm going to give you free access to that stuff for a little while. So if you're on the mentorship group, make sure you register and you jump into that session with myself and Ray in about 10 minutes. No staff chit chat today, guys, because I'm going for 2 reasons, really. One is because I'm going straight into the show with Ray after this, and the other one is I've had the kids on my own for the last couple of days, and I'm exhausted.
Sorry.
Have a great week, guys. I'll be in each day around 10 in the morning, maybe a little bit earlier to do economic calendar and market update. Geoff will be in Monday to Thursday around 3 and 9 p.m. I think it is, to do Learn to Trade free. We will have Ainslie and potentially with Orlando. Lloyd's back, should be Orlando and Lloyd in Tuesday and Wednesday. Shukri in Monday and Wednesday. I'll be in with a new trading expert on Thursday. It's going to be another good old day. Thank you, SK. It's going to be another good trading week. Lots to talk about. Lots of information this year. Make sure you join us. Have a good week. Make good decisions. To the team, thank you very much for turning up on another Sunday and sharing so freely. To those that have joined, I hope you take away some great information, and we look forward to catching up with you during the week. Cheers, everybody. See you later.
Bye, guys. Sign, you got a good point.
Bye.